Hi everyone, this is Shannon from Smart Business Solutions Financial Planning. Just want to go through with you today, what are the differences between stepped and level premiums? So insurance premium structures, generally speaking, the life insurers will give you basically a choice as to whether you want to have your premium structured as level or stepped premiums, or you can actually do a combination on those. And what do we mean by this premium structure? And depending on the structure that you choose, this is an absolutely critical decision that needs to be made. And I do feel in the past that many insurance brokers did not spend the time to ensure that their client really understood the differences between those premiums and why you need to be considering all of the aspects before you make such a choice. It's not a choice that you make on something just for this year. It is going to be something that has a wider impact overall on the cost of your insurance and how it is going to impact, I guess, your lifestyle situation. So it's a really important decision to be made, and I think it is something that does need to be looked at closely and really explained. So what do we mean by step premium? So a step premium, it does start lower than level premiums, and it does increase by as you age. So it increases by steps. Now the big issue is, and the reason it goes up in steps, and definitely starts a lot cheaper. So when cheaper than level. So when you will have a look at the insurance quotes that we would give you, if we do it under stepped, it'll be a lot lower than level to start off with, and maybe very, very appealing. But however, the challenge is that premiums are recalculated every single year as you get older. And then also on top of that, potentially the changes with the CPI index as well. Now, the challenge with that is that as you get older, you are more likely to potentially need that insurance, and it's going to get a lot more expensive. Now, there's no, I guess for you, as you get older, you don't know what next year's insurance is going to be. It's just going to go up by quite a chunk. And sometimes these steps are very big steps. So it does mean in the earlier years, whilst it may be more affordable, it becomes too expensive, and that at a time when you need it more, and I'd really hate you to stop your insurance at that time. So step does have its purpose in the sense that if you did intend to only have the insurance for a short period of time, that may be something to think about. So looking at then level premiums will definitely cost you more to begin with, but the premium you charge will be based on your age at the time you took out the cover, and then just CPI indexation from then on, which I know now my kids, once they're 18, I will be getting them life insurance, TPD, trauma and income protection insurance at age 18. And I'll be putting it on level, because when they get to whatever age, their premiums will be so much cheaper. But at that time, yes, it will start out a lot higher. You can still have the cover adjusted to keep pace with inflation as you're going along. And the cost of new cover will be added to the premium each time inflation is applied. But because of the level premiums don't increase with your age, you can actually have a lot more certainty around what your costs are going to be, and continuing on from there. So how do you decide what is right for you? Generally, leveling premiums don't make it worth it until at least the year 6 or 7 years. So what we do when we look at an insurance policy for you, we will get quotes both under stepped and level premium structures, and we will have a look, and I call it the tipping point or the crossover point. At what point is it where if you started on, say, level, at what point would it have been more beneficial if you were going to end it quickly to have had stepped, or vice versa? If you said you were only going to hold the insurance for not a very long time, then I probably would say, well, maybe the step's cheaper. But that's something that I try and work out. And often it can be the 6-7 year mark, or even longer. So that means if you're on level, you could be paying for 6-7 years more premiums than if you were on stepped. However, at that point, it becomes neutral. And then after that point, it becomes more cost effective to be on level. So what we often do is when we're looking at your insurance, we try and look at it at a minimum over a 10-year period to see what's going to be the most cost effective for you today. So it's really important to have a think now and making sure everything's covered. And then what you're looking at for the long term, And if it is a long-term situation, then level premiums are definitely going to be probably a right situation for you. And this may be something. And if you think that you may have a lot of changes coming on, then you actually may want to look at the stepped, but it will get higher as you go along. So it really depends on your own personal situation, and it is an important, important decision. Now, what are the key differences if I try and summarize it? What type of mortgage is it similar to? Like, if I'm trying to put it into those types of terms, step premium, very similar to a variable mortgage. You don't know what next year is going to be. Whereas a level is more like a fixed mortgage, if you want to put it in those terms. Step premium, how often do your payments increase? They are reviewed every year and calculated on every policy anniversary. And it is by step. So it's just recalculated based on your age at that time. Whereas the level, the premium rates stay the same, tend to remain the same, just with a small increase based on indexation, and that's all. What about as you get older? Your premiums under step will significantly increase once you reach age 50 and over. Whereas under level, your premiums will generally become more affordable for policy owners once they reach later stages of life. So that's something really to think about. So it's really important when you're going through your different insurances and whether you want to under stepped or level, always ask, if you get quoted on insurance, always ask, what is your premium structure? I do really feel this is something that advisors in the past have not spent a lot of time going through with their clients. And I'm surprised when I come across clients who have had the same insurance policy 15, 20 years, it's on stepped, and maybe, they should have thought about, the advisor should have explained the consequences, and the advisor should have said, well, okay, they're in their late 20s. They're going to hold this income protection insurance for well over 10 years, well over 6 to 7 years. Yes, I probably should get this under level. So it's something that really should be considered when you're going through. So let us know if you've got any questions, and we're happy to help out. Thank you.